I'm going to tell you the number one thing you need to know in finance to make you ridiculously rich. The US debt problem doesn't matter. The only thing that matters is whether they can finance it. And this is exactly why, over the long term, Bitcoin is going to go up forever. As central banks keep printing money and the price of everything continues to get inflated, Bitcoin is designed to protect your purchasing power over time. It's going up forever, Laura, and it's not that complicated. This is Dante Cook with Bitcoin Simply. Let's go. We all know the money is broken. Let's just start with a simple but crazy fact that it costs more to buy an existing home than it does to build a new one. The median price of existing homes just flipped the price of new homes for the first time. The manipulation of money has created all sorts of distortions in the world. Everyone likes to talk about the Fed's CPI print, which talks about year-over-year increases in inflation, but it doesn't talk about the aggregate increase in inflation, which since 2020 is up over 22%. And most people who actually calculate things in the real world estimate that that number is about 50%. Just look at your grocery bill. Or if you're in the Christmas spirit, look at the price of the hotel room that Macaulay Culkin went to in Home Alone. In 1992, that hotel room cost about $350 per night. Today, it's over $4,280 per night. Markets that we know that are volatile, like the oil market, wasn't volatile before 1971. And that's when we moved off the gold standard, when the value of money wasn't determined by things in the physical world or things that were tied to work, but for money on a screen or things that could be printed out of thin air. When you deposit money in a bank or when you get a mortgage, more money is created out of thin air. We live in a debt-based system, and so we need continuously more debt in order to pay off the old loans of the old fake created money and to propagate and create more new fake money in the future. And if that confuses you, you don't need to understand it. Just understand this one thing. We are going to create and print more and more money, and that's going to lead to more and more debt in the future. But here's the number one thing you need to understand in finance. That doesn't matter.
Why is the debt-GDP ratio important? Why is 100%? Why does it matter? Why does 200% matter? Why does 300% matter? I mean, look at Singapore. I think Japan is, up there at near 400%. These economies keep running. They can keep financing their debt, but it's all about financing the debt. It's not about repaying the debt. I'd come quietly if you say, well, okay, the debt-GDP ratio is measuring the debt repayment potential, but debt's never repaid. Let's get real here. The can is kicked down the road. No one ever pays their debts back. Okay,
yeah, Michael, I'll get real with you is that I happen to agree with you. I mean, there were a lot of very smart economists who 10, 15 years ago predicted that if the U.S. debt to GDP ratio hit a certain threshold, I forget if it was 95%, 100%, 105%, that growth would suffer and that there would be drastic financial consequences. That hasn't happened. I mean, I do agree with the late and great Charlie Munger that if you think debt and GDP can go to, 20,000%, you probably also believe in the tooth fairy. So I do think there are natural limits. But yeah, broadly, to be clear, my own views, I do agree with you that it is the refinancing capability and that it is about how much money there is relative to the debt rather than debt to GDP.
Is the financial system going to fall apart? No, it isn't. Just think back to, go back to year 1900, okay? What's happened to the dollar since 1900? It's devalued dramatically. I mean, whatever, a dollar in 1900 is probably worth 12 cents now in real terms. Okay, fair enough, okay? If we go to, year 2500, what's the dollar going to be? How many cents is it going to be? They're going to keep devaluing it. Okay, that's the point about paper money.
This creates trouble for everyone except the people who are already rich. Because if you own assets, well, those assets are relatively scarce, whether they be stocks or whether they be real estate. There's only certain corporations or nations or people that can create these things out of thin air. When you're pricing those things and things that it can be created out of thin air by 12 people at the Federal Reserve who we didn't elect, who don't work for a federal organization and who have no reserves, well, that leads to the distortion and the prices of all of these things going up over time.
So there's a lot of immorality and corruption that comes out of having this broken money. And, the people who control the money, I mean, it's patently absurd that we have 12 people that can set the price of money. I mean, the price of money is the most important price in any economy because it drives capital allocation decisions, which then drive the correct productivity, and outputs as a result of, you want to invest in the right things. And so if you distort the price of money, you make malinvestments and you're wasting money on things that don't make any sense. And that's a cost to society. If we had not had all of the distortions that we've had, we would all be living so much better. If you look at all the technological innovation that's taken place in my lifetime and in your lifetime, I mean, we all should be working 20 hours a week. I mean, it's unbelievable how much technology has improved everywhere. And yet, because the money's broken, we're all still working like slaves because we're on this hamster mill, hamster track of trying to stay ahead of inflation, which is always eating us up. It's a real problem, and everyone feels it, from the top to the bottom. That the one difference, though, that I'll point out: the people at the top know the game, they understand what's coming, they understand how to play it, and they can make inflation work for them.
And the implications for the average person? Higher asset prices, home unaffordability, and the prices of everyday things like groceries continuing to become unimaginable in your monthly budget. The only way to survive is to own assets. And the best asset over the last 14 years to buy has by and far away been Bitcoin. And the way that you get the maximum value of Bitcoin is by buying it and removing it into self-custody. That's exactly why the Bitcoin way exists. Members of their team will walk you through proper 100% self-custody, step by step, so you can remove all counterparty risk, stop sharing your keys with third parties, and ensure you protect your generational wealth the right way. Head to thebitcoinway.com and schedule a free 30-minute session with someone from their team.
Beauty of Bitcoin is, just by you opting out of the system, you're defunding their system.
Right.
And you're now joining the sound money team. So simultaneously, while you fight it, you can also benefit from switching over to the system. And it actually reminds me of a page in your book where you say something very powerful that also resonated with me. You say, having a form of money that is fixed in supply is literally a once in humanity type of event. So could you elaborate a little bit about that?
Yeah, so this is, Saylor has said this recently, and then Luke Groman said it the other day on Twitter. This is the most inelastic commodity in the world. And let me explain what I mean by that. When the price of any commodity goes up, the suppliers of that commodity will change their behavior and make more of it in order to bring the price down, balance supply and demand. And so, as an example, if the price of gold doubled tomorrow, we would drill for, find, and produce more gold. If the price of oil goes up, then it makes marginal oil fields profitable, and so oil drillers will drill them and produce more oil. So think about that. The supply price goes up, supply goes up. That's the law of most commodities, okay? With Bitcoin, because you have 21 million fixed supply, it's a very unique commodity. It doesn't matter what the price does, the supply can't go up. The supply just is the supply, period. It's fixed, it's algorithmic, it's decreasing every 4 years in terms of its new issuance. So we've never seen something like this before, ever. There's never been any form of money that could not be diluted. I mean, even gold, which used to be the soundest form of money, the supply grows at 1.7% a year. Multiply that times 55 years, and you've doubled the amount of gold on the Earth's surface. But Bitcoin, there'll only be 21 million. So as a result of that, it's a once in humanity, it's a paradigm shift. I mean, people couldn't fly, and then suddenly people could fly. It's that kind of a shift.
The world price in Bitcoin will continue to get cheaper and cheaper over time. And you're probably like one of the many people that ask me questions all the time. Dante, Bitcoin's at 90K or 100K. Am I too late? Yeah, sure, that's easy for you to say. Take the long-term approach and the long-term view. You're not too late. We're just getting started in this rally. And here's why.
Now, I think what most people would think by listening to this podcast, and Bitcoin's currently sitting at $100,000, you'd be like, Nico, like it's late. But you actually make the case that we're still in the early adopter phase and we're on the cusp of entering the early majority phase. So what do you mean by that?
Well, I think that's exactly right. It's the point in time. I mean, Saylor says this. He said he thinks the next 10 years are going to be a digital gold rush for Bitcoin. I think he's right. I mean, we've broken through. I mean, I remember 17. I got involved in 14. I bought a few of them, not many. I bought more in 17. I bought on the dip after that twice, doubled down twice. But 18, 19, it was still pretty fringe. And we had just come through the block size wars, and there'd been forks earlier, and so on and so forth. And then 20, it worked. We took off with all the money printing because it responded to that and as a sound form of money. But then, the tightening brought it all back down, and SBF blew us up. But but it's now there's now almost nobody that's not aware of its existence. I mean, here's a perfect example. This morning I was reading the Wall Street Journal. Nick Timiraos was speaking about Fed policy, and he talked about how whether it was tight or loose was in part determined by things like this, the screaming price of Bitcoin. I don't think those were his words, but for Bitcoin to be mentioned in an article about Fed policy, I mean, that's kind of an Overton window shift, right? So everyone's becoming aware of this thing. And so, yeah, I mean, the Gladwell model says as long as it takes you to go from 0 to 15 or 10%, it'll take the same amount of time to go from 10 to 90. And so we're 16 years in, and these adoption curves, they do get steep. And I've seen the same curve for mobile phones, computers, almost every development. I mean, washing machines, automobiles, any new invention. And it tends to get started and people start using it, the early adopters. But then when it becomes pretty obvious that, oh, this is a good thing and we want this. And I think that's what's happening now. I mean, most people now, well, there's nobody in Bitcoin now that's bought it in the last, 15 years. It's not in a profit condition. So it's working. Even if you bought at the peak, pre-SBF, you paid 60 or 70 and we were as recently as 107. So, it's starting to work, and that's just going to attract more people.
Don't overcomplicate this thing. The current fiat system needs more money, and it will continue to print more money. In Bitcoin, as more money is created into the system, or as we look at Bitcoin as it relates to global M2 money supply, well, it is the most sensitive to more new money being created. So if you believe more money will be created over time, then Bitcoin is the best asset in order to play with that thought process. There is no asset more protected against the existing system collapsing or the existing system printing more money. You win on both sides. It's something to consider in 2025 if you already haven't. Something else to consider in 2025 is connecting with Bitcoiners and crazy people in real life. Hundreds of Bitcoiners from across the world will be coming to Dallas, Texas from April 3rd through April 6th to the BitBlockBoom conference. BitBlockBoom is the longest running Bitcoin event in the US, and you'll get a chance to hear from some of the best speakers in Bitcoin, like Parker Lewis, Marty Bent, Bob Burnett, Guy Swan, Gary Leland, and me. Your ticket gets you access to exclusive workshops like how to buy your first Bitcoin or take it into cold storage, or even to set up things like mining at your own house. You'll also get access to exclusive events like the Saturday Casino Night. Head to BitBlockBoom.com and enter the promo code BBB25 for $100 off your ticket. That's BitBlockBoom.com and enter the promo code BBB25 for $100 off your ticket. I can't wait to meet you guys there. This is Dante Cook with Bitcoin Simply. Happy stacking.